All right. Good morning, everyone. It's Sunday, 10:30 a.m., July 26th. Today, our guest is Austin Ashraf. We have him on the call to discuss the U.S. stock market. We're going to be talking about gold and silver. We're going to be talking about the U.S. dollar, issues with the U.S.-China tensions that are going on, and then just some investment strategies that Austin has that he wanted to share with us. And yeah, we'll just discuss a general scope of the market for the week ahead. So welcome, Austin.
Hey, everybody. Thanks for having me.
Yeah, happy to have you here. So Austin, how did last week go for you? I mean, what was your sense of the market?
Well, a couple of weeks ago, I said that I have been raising cash, and 2 weeks ago, my exposure in the market was probably the lowest in a while, and primarily because the valuations on some of these high flyers, especially growth stocks in the SaaS area, has stretched to the point where it was starting to look pretty obnoxious. And as a prudent investor, when there's so much excitement and people just throwing money at these stocks, you gotta take some off. And so I still think that the valuation in the software sectors are very stretched. So my strategy now going forward is I still love those stocks. I still think that they have a long runway ahead of them, but they need to just settle down a bit and until the fundamentals can catch up to them. So I intend to trade these stocks, over the next few months or so. These stocks are going to develop trading ranges, and that's how I intend to play. So
Yeah, that's it.
And then the market really, I still think that market that's is a little stretched out as well, and needs to just calm down a bit.
I'm glad you mentioned that you've been starting to go more into cash and started to trim down your position. So for investors like myself and other people who are watching this video, when you see a market, a bit overextended, and let's just say you are raising more cash, but the market keeps taking off, how do you sort of reconcile that? Wait a second, did I cut out too early? Should I hop back in? How do you go about those feelings of euphoria or FOMO, if you ever have any?
You don't. I've learned one thing in being in the market for so long: is you don't second guess your decisions. As the market continues to go against you, you just keep selling into the market, and you gotta have your parameters, your strategy. If you believe that market is stretched out, and it can stay stretched out for a while, but that's okay. The market is giving you an opportunity to raise more cash. So that's how I look at it. I don't worry about it. When I see market just continue to go against you, and as you're selling into it, you look at I own stocks, and I try to understand as to what the real value is. When the stock is trading historically, especially growth stocks, I don't try to pay more than 20%, 20 times sales. And a lot of these stocks are trading at 40, 50, So historically, what I've seen is eventually they all come back to earth, and eventually valuation matters.
That's a very solid point to mention. I think this is one thing that we're dealing with in the cryptocurrency space, because our community is heavily cryptocurrency based. What we're seeing is some astronomical movement in some of these cryptos, and obviously your thought process of how investing and trading works when you see markets a bit overstretched definitely applies to crypto as well, because it doesn't matter if it's gold or oil or Microsoft or Bitcoin, right? They still have a chart associated with it. They somehow, still have a relative idea of valuations or overbought levels or some technical analysis associated with it. So I guess my other question to you is, you know, when you're in that period of potentially a bubble developing, when George Soros always said that when he sees a bubble developing, he tries to make sure that one, he's not, effectively buying at the top, but if he does see a bubble developing, he makes sure to jump in because that's when he knows that there's a significant amount of money to be made. First of all, any thoughts on that quote by his, and what are your thoughts, when you do see a bubble developing, and do you see one developing now?
The way I see it, in the market, you may have certain sectors in a bubble territory, but overall market, to me, does not look in that level at all. Actually, this market is very bifurcated. You as I mentioned, the software sectors is probably in a bubble territory.
Can you give me some tickers or companies that I should be looking at that are overstretched so I can visually show the viewers?
Yeah, companies such as Okta, ServiceNow, Zscaler, some of these stay-home type of stocks like DocuSign, Zoom, these stocks seem very stretched, as you can see by the chart.
Yeah.
So a lot of expectations. These companies, by the way, will continue to do really well. They're going to continue to blow their numbers away. But what's going to happen is these stocks are going to will stop going up, and they will trade sideways until the valuations becomes a little bit more reasonable, at least to me, so that's the way I look at it.
Yeah, fair point. Now you mentioned DocuSign, Zscaler, Okta. Now in the larger tech names, Apple, Facebook, Amazon, even growth stocks like Tesla, are you sort of seeing the same thing over on that end, or do you think that those companies are somewhat fairly valued?
No, they look pretty stretched out too. Like Microsoft is trading at it's the highest valuation that I have seen in a while, and it's also considered stay at home type of stock. You look at Apple the same way, so these big tech companies, they were safe haven. They were the growthy names that people felt comfortable owning in this environment where the growth was collapsing, and people have tendency to overbuy them. I mean, look at all the portfolios, mutual funds and hedge funds, same names over and over. They're the top 10 stocks in almost every growth portfolio. So they get sometimes these stocks get overbought.
Yeah, that's a fair point. So we talked about tech and software being a bit overstretched. Now these are some of the companies that are effectively holding up the larger indices that they're in. Do you think that there might be somewhat of a rotation from, say, tech, software, semis, maybe into something like financials or healthcare? Or are you still, trying to stay away from financials and you're still fairly bearish on it?
Yeah, I mean, to me, financials really don't make any sense because I do not expect rates to go up anytime soon. And Fed is telling you that, they're in no hurry whatsoever to drive rates up. And as long as the rates are in this territory, to me, these financials are definitely deep value at this point, but I don't see their models, very attractive models at this stage. So to me, the stocks that look like as we start to recover, obviously market thinks that we will see some sort of recovery from these crises. The industrial companies should benefit from tremendously. So money seems to be going into the value stocks on that side, and I continue to believe the healthcare it will remain very attractive, primarily because of the aging population. So that's the way I look at it.
Yeah, I think that's a fair point. Um, what's your take on housing? Because there was a survey Apartment List did. They said more than one third of renters in July, they did not pay their rent on time, and we have the stimulus package coming up Monday, and the stimulus is supposed to be cut from $600 to $400, so almost a 33% cut. Do you think that having less stimulus will make more of an impact on the economy, whether it's positive or negative? Like, how are you looking at housing as well as the upcoming stimulus package?
As I've said this many times, most of the stuff that's out there, it's really noise, and we get bogged down with all that is happening and keep paying attention to all the details. Always pay attention. There's only one entity that I pay attention to, and that is Fed. And basically what they have told you over and over and over that they have backstopped this market. They have given you a put. They're saying that whatever it takes, renters are not paying their rent, fine. They're passing, I think I read somewhere yesterday that they are going to extend the period where people cannot be evicted. And when they cannot be evicted, a lot of these people can pay their rent. They're taking advantage of the situation, not by not paying it.
Yeah.
So in other words, these guys have a little bit more cash than they would have otherwise, and also when you look around the country, that the low price housing it's a very tight supply. You can't find a house, but as you go up the scale, the housing is not as good. So everything is bifurcated, depending on what do you want to look at. To me, this Fed put is very, very crucial to pay attention to, and they will do whatever it takes.
Yeah, I think that leads us into the perfect segue for the next subtopic, which is the dollar. Obviously, over the last several weeks, really breaking down and losing strength. Now, the way I want to tie this back into your conversation about the Fed, I understand that the Fed is putting a backstop on the market, but is it really doing its job effectively to keep an economy going, or is it really out there to bail out corporations and wealthy people? Because what we know so far is the dollar's gone down. Okay, yes, people are getting money, but the Fed is not effectively able to create jobs, right? We saw recently that Macy's, I think, filed, I don't know if it was bankruptcy or some of its locations, yet they still gave money to their executives, way at the top. I think United Airlines also said that, yes, we're going to take that bailout, but after September, we're still going to have to cut jobs. So I understand that the Fed is putting a backstop on the market, but the Fed can't create jobs, it can't create productivity, and it can't create innovation, right? So effectively, it can only flood the market with money, which in a sense inflates asset prices. But is it really doing anything to bring up the economy as a whole, or increase GDP, or increase productivity? I guess that's my real question. That's the real conundrum here.
Um, you know, what Fed does the best is they 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 have the ability to print money till the cows come home. You know, and what you're saying is absolutely true, and it's a market. These all these markets are discounting mechanism. They're looking before market was looking at maybe 6 months down the road, but now market is looking further, maybe year to 2 years down the road, you know, and eventually, the way I see it is the market thinks that in about a year or so we will have some sort of solution, and we will move very quickly toward the normalization, you know, and that remains to be seen. But in essence, market is, I mean, Fed is going to backstop any sector of the economy that they feel needs infusion of cash, you know. So to me, a lot of other noise, other stuff is really a lot of noise. Uh,
Yeah.
you know,
Well, let's dive into it a little bit deeper. So, okay, let's just say we're on this path that Fed has the ability to print money at will, and pretty much ad infinity, right? There's really no stopping them.
yeah.
Where I mean, first of all, where does this go and how does it end? Because no person in the right mind can say there are no consequences to such form of aggressive, currency printing, right? I mean, I don't think there's a sane person out there that says, yes, with all this printing, nothing will happen to the dollar and we'll just be fine, right? At some point, the effects will play. It doesn't have to be near term, but it will be felt in different parts of the economy, whether it might be an inflation of prices, it might be that the dollar becoming weaker. I don't quite know, but I want to hear your thoughts.
Uh, you know, the way I see it, uh, I'm no fan of Donald Trump, but in the last 3 years or so, if you understand and see what he was trying to do, and nothing is going to change even after he leaves now. He has basically changed the trajectory of uh, the U.S. economic policies. He basically told you that I am going to take growth from the rest of the world and bring it home. What he's doing to China, what he's doing to India, what he's doing to EU, it's basically been saying that we have been feeding these people, and so what's going to happen is, the only way out of this whole mess is by U.S. going back in a hyper growth mode. Growth is the only solution that's going to bring the deficits down. And I really think that on the other side of this crisis, you are going to see, a tremendous potential in these markets to go higher. You're going to see a lot more jobs come back. It's already, you're starting to see what this administration has been forcing these mega companies to bring their manufacturing here. For Taiwan Semiconductor to bring start building their newest plant here in the U.S. That's just one example. So at this point, investors need to be looking a little further out instead of all the negativity that you see happening in front of you.
Yeah, that's a fair point. Well, I mean, I do understand that there is somewhat of a deglobalizing or more so nationalism-based, economic model that's actually kind of been um, talked about by many nations, especially the US. I feel like that's been our motto for the last couple of years is, make America great again or bring jobs back. I mean, for one, it hasn't worked. Number two, when we do repatriate supply chains back, it ain't like we're going to be bringing back hundreds of thousands of jobs. There's going to be a lot of robotic jobs, right? So, where exactly, I mean, how do you see hyper growth coming into play in the US if a lot of jobs that are coming back, again, if they do, um, you know, paying people in China, paying people in India at cheaper prices has been one of the reasons why the US consumer has been able to consume for so long due to such relatively cheap prices of goods. So, how can one make the argument that if you repatriate American or say Apple supply chains back into America, wouldn't the iPhone cost significantly more, or rather, wouldn't the Apple share price go down if they kept the same prices?
That really leads to my question to what I've been saying all along, that you are going to see explosion in technological advances because these companies will be forced to adapt technology a lot faster and bring in technology to improve productivity, to bring their costs down. Remember, the capital always goes where it's most effective. Capital will find a way to bring the cost down and make the whole thing more productive. So to me, over the next 10, 20 years, that's where you want to invest in the tech area, because it will change your basic dynamics. As why are software companies just going to the moon? Because it is making companies a lot more efficient and making the employees a lot more effective. I mean, a lot of these companies have spent 20% of their capex that they would have spent over the next 3 years in literally 3 months. And they're no dummies. They know the only way to keep to bring efficiency and improve productivity is to adapt to these technologies and new technologies and so on. So in the end, people do not invest capital where it is not going to be productive. You think that Apple or Taiwan Semiconductor or whoever is bringing their plants here are dummies? No, these are multi-billion-dollar investments. And they have figured out a way to make their products more efficient and cost effective. So I don't believe that you're going to see $1,000 iPhone.
Yeah. Okay. I mean, I think that's a good way of looking at it. You are right that companies will be forced to technologically adapt to be able to minimize their own costs while maximizing their profit for their stock price or their shareholders. So I can totally see that. Yeah.
I mean, look at what was it? Honeywell. Somebody said that they are going to have 80% of their factories automated by, what is it, 2026 or so? So that's what's happening. As a lot of this stuff coming back home, they're adopting they're buying robots, industrial robots, as fast as they can. The companies like Teradyne or Rockwell, they can't make them fast enough.
Yeah.
So I think that once again you're gonna out of the crisis you're gonna see explosion in the tech area.
What are some companies that you're looking at in terms of AI and robotics for, let's just say, if we're talking about this emergence of more automation in jobs and um, technologies, are there any specific companies that we should be paying attention to?
Yeah, I mean, Teradyne is very big.
What's the
Uh,
ticker on that?
TER. Uh, Rockwell, what is it? Rockwell Automation is another. They make these industrial robots. You know, uh, and then also, was it ARC has a very good ETF. It's what I think it ARKQ, which invest in primarily robotic companies, industrial robotic companies. So uh, take a look at those ideas.
Okay, we'll have to pay attention to these.
Yeah.
Let's focus a bit more on the dollar now in relation to precious metals. So we saw gold, really take off, which I mean to me makes sense. One, because we've had the whole idea of excessive printing, and I think the topic could go both ways. That maybe commodities like gold and silver are moving just because they're moving, or it could be very well the fact that maybe the whole idea of printing. Um, US dollar has started to impact gold, and maybe people see that as a potential hedge or reserve against currency risk. Um, what are your thoughts on gold and silver basically going parabolic? Because several weeks back, I had stated that I don't see gold under $2,000 by the end of the year. So I want to get your take on that.
I really not an expert in that space, but the way I look at gold is what's happening is in this run up, literally all the previous hedges that the institutions used to deploy to hedge their portfolios have gone away, and with the rates where they are close to zero, those hedges don't work anymore. So as the market goes up, these institutions have found only one hedge, and so I think that the gold is going to react very much to the market. If the market's correct from the current point, from the current level, you will see gold as well correct, and so I think that gold and silver are being used as a hedge, and and then as long as the market stays up, you're going to see prices on these precious metal continue to go north. But if the markets roll over, you will have correction in these precious metals as well.
Good to know. Let's see. So the last thing I want to talk about is just a tip or an investment strategy. So I was watching an interview with Bineet Kotari. He's a gentleman from Duquesne's Capital. He works with Stanley Druckenmiller. Specifically, his forte is tech investing. The one strategy that he talks about is, when you're investing, people often talk about not putting all your eggs in one basket to be able to hedge your tail risk on, your potential portfolio seeing a downside because of one particular market tanking, and then all your investments get tanked. But rather, he says, have, first of all, a diversified portfolio of investing, even in tech if possible, but you don't have to be invested in 10, 15, 20 different companies. Have maybe a few key ones that you focus on, and for the proverbial, not keeping all your eggs in one basket, he says, keep a few eggs in that one basket and just watch that basket very carefully. One, I want to hear your thoughts on that strategy, and is investing nowadays different than it was previously because, the hedging is not really the same anymore because people often said, okay, well, you can go into bonds for safety and security, or you can hedge your portfolios with gold and silver. First of all, do you see that the market has kind of shifted its dynamics where you cannot catch a break anywhere? Or do you think that is still at play?
First of all, that strategy can only work if you are doing your homework. Most of the people that I see trading these stocks literally have no idea what they do. They're trading the momentum, and that's very risky if you're putting all your money in based on momentum. So in order for that to work, people spend so much time, looking at the chart, reading about the markets, reading about all the news or whatever. If they spend 20% of that time doing research on really good fundamental stocks, and build a confidence in their trajectory of growth and the management style and so on, you could be building wealth, real sense, and then you can have a very concentrated portfolio. Where you pray that the stock comes down so you could buy more. That's absolutely. I agree with that statement, but there is no free lunch. You gotta do your homework, and believe, in a sense, that 75% of the time market is going to go up.
Yeah.
And so, but most of us just keep timing the market, just spending time as to, hey, market is going to roll over, and I want to. We are in this perpetual game of beating the market. Market doesn't care, So as an investor, what I would tell all your listeners is, do your work, invest some time, and find good 4 or 5 great ideas, and then just build your portfolios around that and have confidence in it, that these stocks are going to look at, even though we had such a horrible crisis, epidemic, but a lot of these tech stocks are up 200-300%,
Yeah, they broke their all-time highs quite easily.
If you're timing the market, it doesn't work. So the smart money is always doing their work. They're not paying a whole lot of attention to day-to-day noise. They're doing work. They're finding ideas that, hey, this thing is going to work. And if the stock comes into our range, we're going to back up the truck. So, do your homework, and there are opportunities every day. New products are being announced every day, and things are happening, and it's not that difficult.
Yeah. Can you give us 3 tips of your personal day-to-day, not strategy per se, but rather what are things that you pay attention to? Like, what do you watch on the news, or who do you read, or, what are some resources that you look at? That would be great for our viewers.
First thing that I do is when I get up is I look at the 10-year treasury,
Okay.
and then I watch anything coming out of the Fed. If there's anything changed, it doesn't change on day-to-day basis, but if you see a big movement in the treasury, then something is going on. And then I'd look at the US dollar, what the dollar is doing. But I watch CNBC, but I turn off the sound, and once in a while I see somebody really smart that I know, then I'll listen to that person. But I don't want to get bogged down with all the nonsense going on. I'm focused on things that gonna matter. I look at a lot of research, tech research that I subscribe to from some of these investment houses, and I want to know what's going to change the world over the next 6 months or so.
Can you tell us one of the research firms or tech houses that you listen to, so our viewers know if they can maybe subscribe to their newsletter or go on their website?
I pay attention to Needham on the semis, and then I pay attention to Morgan Stanley on the internet side. Then I have some proprietary research that I get from people that I think are very smart, that understand the SaaS market really good. I read their stuff in the morning. On the weekends, that's what I do. I'll go over and go into a little bit more detail, and do my research and just have some conviction, as to what I'm going to do Monday morning.
Yeah.
Have some idea.
So
I have no idea what the market is going to do, but if the market comes down, what's my strategy? What am I going to do? I don't spend as much time on finding shorts because I really don't have the ability. It takes a lot of hard work to find short ideas, and I'd rather be doing something else, because I know 75% of the time market goes up, so I'd rather raise cash. To me, that is my short. I'll raise cash and let the stocks that I want to own come into my price range.
Yeah, I think that's a fantastic tip. So going off your point about bonds and doing research on the weekend, I think that kind of brings us into our final topic. Is we have the 10-year right in front of me, the chart right now. What are your thoughts on the 10-year right now, and what are you looking for the week ahead?
You got I think the 10-year, basically you're looking at pretty close to the low on the 10-year rate, 10-year, and I don't see much movement in the 10-year Treasury, at least for another couple of years.
Oh, wow.
At least until we're on the other side of these crises, and we start to see growth start to come back. And even then, it's Fed is printing money like crazy, and to them, it is very crucial that rates stay low.
Yeah.
So it would be a double whammy if the rate starts to go against them. So I don't see much movement in the bond market. That's why I'm not excited about financials. I think they're great value, but I don't want to invest in that because I really don't see any growth for the time being.
Yeah. I was going to say, if we look at that 10-year, dating back to 1980s, I mean, you could see a slow, perfect declining, channel. And finally, that channel kind of puked out just a couple of months ago. It seems like the 10-year is almost destined to go to zero. Do you see that at all? Because if we look at this as just a descending channel, I mean, it kind of fits pretty darn perfectly.
Well, Fed is basically telling you they're not in favor of negative rates. So I think they're quite comfortable with the current level. And if they print more money, they may drive the rates a little bit lower. I think that they are. I don't see much movement for the time being.
Okay, fair point. Final thought, Austin. What are your things that you're looking at for the week ahead? You know, you said you do some homework. Um, Anything come up in your homework that you saw that you should be paying attention to for the week ahead?
I still think that some of these gaming stocks are attractive, and I'm quite bullish on Sony. So I think that this is one stock that I want to be looking at. I'm still very positive on 5G. I think things are starting to happen. I recommend all your listeners to listen to Verizon CEO's conference call. He basically is talking about 5G and what's happening in that space. So I think the semiconductors are going to play a huge role, and the money will shift from software to semiconductors over the next 6 months or so.
Wow.
So
yeah, that's bold.
yeah, so you will see. I shorted some puts on Texas Instrument Friday, and I'm building up. I got some building positions in Qualcomm, Marvell. So these are Skyworks. These are stocks very sensitive to 5G deployment. You know, so that's what I am thinking. That there are always opportunities in the market. You know, I highly recommend that all you listener, listen to I'm talking about doing your homework. Listen to conference call of some of these major companies like Microsoft. If you want to follow real estate, Blackstone. These guys, the best of the best in the business, and they give you so much information. You know, they telling the investor the roadmap, and they are some of the brightest people. You know, you wanna follow the semiconductor industry. Listen to the conference call of Texas Instrument, because they are so broad based. They're into everything. You know, when I was active in the market, I had a list of 50 or 60 companies. I would religiously listen to their conference calls, and I would learn so much, because most of the people are lazy. You know, they don't want to take the time to do it. And I would find myself always one step ahead of everybody. You know,
Yeah.
So you're talking about the great trading ideas. You know, get in the habit of listening to the smart CEOs. It is free. You know, and you gain so much knowledge.
I completely agree. I think definitely listening to these conference calls. Even I think there's so much content that's put out nowadays. Free interviews on YouTube, podcasts where these guests appear. Yeah, I mean, there's just so much consumption that one can do for free, and you get great ideas and great insight from the smartest people. So I'm right there with you.
The good thing about conference calls is that you actually get to see what are the analyst community's concerns when they ask them questions. You know, you can see what the analysts are. Who is some of the best analysts that follow the company. You know, what are their concerns and how are they looking at the numbers? You know, always remember that these CEOs, when they go on these shows, they are there to pump up their stock. You know, they're the salesman. You know, that's the only reason they go on Kramer's show or whatever. You know, but on the conference call, it's not exactly the same, because you have some analysts that hate the company. You know, or they have a short on the company or sell on the company, and when they ask questions, you learn so much as to what the real deal is. So that's why I pay more attention to conference calls or reading the transcripts. I think they're very useful.
Awesome. Okay. Well, I think that we'll leave it there because I think those are some great actionable items for our viewers. If there's nothing else you want to mention or talk about, Austin, I think we can wrap it up here.
No, I hope everybody stays safe and be positive and just do your homework and and build wealth for yourself and your families. Because this is the greatest time to be alive, actually, as an investor. So
Yeah,
go do.
I completely agree. All right. Well, we'll leave it at that. Let's work towards building wealth. Awesome. Well, thank you so much, Austin, for joining. We hope to see you soon.
Hey,
And until then,
I missed Faisal. What happened? What happened to Faisal this weekend?
oh, I think he had some. I think he had some throat issues. So hopefully he's doing all right. But that's why we got you on the call, the other expert, right?
Sounds good to me.
Awesome. Well, we'll see you soon.
All right, everybody, take care.
Take care. Bye.
Bye-bye.